Hello, happy Monday. Here's another weekly market update. Sometimes I'm like, what am I even saying in these updates? Because they don't change all that much week to week, but there are some little nuggets that I think are helpful and hopefully helpful for you as you're looking at the real estate market here in Phoenix. So if you watched my video from last Friday, a few days ago, I did a more robust market update looking back at November of 2020 and kind of looking ahead towards December and the new year of what's going on in our market. That video is on my YouTube channel if you want to check that out. And this market update will be on my YouTube channel as well if you're not already watching it there, but also on IGTV and on LinkedIn. So starting with the CMI. Okay, you guys, when I heard this number today, I was like, holy crap, because we are very quickly getting close to 400. We're at 382. Okay, like 2 or 3 weeks ago, we were in like the 360s. And then I think last week was like 372 or 376. Now 382, like, this is crazy. This is a crazy number. If you haven't watched my videos before or you don't know what the CMI is, this is a number that I get from the Cromford Report. Cromford Report looks at the MLS data here in Phoenix and analyzes the information. They've created a market index, and that market index is based off of supply factors and historical factors. They look back 20 plus years at where the market should be normally and where it is at today. So in order to get this CMI, they're looking at both supply and demand factors in the market. 100 is a balanced market. Anything above 100 is a seller's market, and below 100 is a buyer's market. So if you know math, 382 is a seller's market, baby. We have been in that for a long time, and it just keeps getting higher and higher and higher. Our demand is still very high, so we're at 35, basically percentage points above normal. We're at 135, so 35% above normal demand, and then we have 65% below normal supply. And that number of supply was like hanging around 63, 64 for a while. Now we're at 65, so it just went down, which is not helpful because we're already undersupplied in our market here. So high demand, low supply is causing our prices to increase. And this factor of 382 is an increase from last week. It will likely continue to increase, which means our prices will continue to increase. So it'll be interesting to see what happens. We normally expect to see our supply kind of drop right now anyway. It kind of tapers off towards the end of the year. So that's normal, but this demand continues to hold strong, and that's what's making things challenging in terms of buyers finding homes that they want to buy. So just to give you an idea of what normal is, around this time of year, it's normal to see about 9,100 contracts in escrow right now. And right now we have about 11,000, 12,000. So obviously that demand is really high because we have more houses under contract than we normally would this time of year. Just kind of proving that point. So that gives you an idea of where we're at as far as supply and demand are concerned. One of the things that's going to be really important for us to look at, and I'm interested to see if we're going to see some changes in this, is our affordability rate. So there is a affordability index that is measured on a national level. And the affordability index says that affordability should be somewhere between 60 to 75%. And what that means is that when you look back at the previous quarter of home sales, you want to see that people in that area could buy 60 to 75% of what's sold in that last quarter. So that means there's a good chunk of affordable housing. So the national average is 58%. So it's on the low end. It's saying that looking back at last quarter, people could only afford 58% of what sold in that quarter. on a national level. When we look at Phoenix, we're in a better position. We're at 61.9, so almost 62%, so a little bit higher. Again, the sweet spot is 60 to 75 is the kind of normal affordability range that you want to achieve. We're at 61.9, so we're on the low end. We're getting close to falling out of that affordability range. I don't know how long it's going to take for that to happen. This information is from Q3, so obviously we're in Q4 right now. We probably won't know about affordability until towards the end of Q1, so it's gonna be a bit. But what will happen in our market, if we fall out of that 60 to 75% range, we'll likely start to see demand go down, right? Because housing won't be quite as affordable for the majority of folks, and they will decide to wait and not buy a house. And if that happens, then prices will start to be affected by that, and prices will begin to stabilize or start to come down slowly. So that would be a really welcome market correction in a lot of ways, especially for buyers, and a natural progression of what we may see in order for this crazy market to kind of come to an end, or at least cool off a little bit. So affordability will be something to watch, so make sure that you're watching that, and I'll continue to report on that. One other thing I wanted to talk about is our contract ratio. So what this means is we're comparing how many homes are under contract as compared to the number of active listings for sale. And right now, our contract ratio for the entire Phoenix area is sitting at 174. Which is insane, because that means that we have 12,000 homes under contract, but only 6,700 homes actually for sale. And that contract ratio, you want to see that lower than higher. That means there's more balance, but we are definitely above 100, and you want to see something closer to, I think, like 50 or so is kind of more of a normal range. So we're definitely blowing that out of the water, so nothing new there. But that's it. That's what I've got for you this week. Keep an eye on affordability. Our market index went up again this week. We'll see what happens next week. And over the next 3 weeks of this year, it'll be interesting to see if our market changes or reacts to the holiday trends, if things start to slow down a little bit, if the demand starts to slough off a little bit. Our supply is already kind of doing its seasonal thing, so we'll see what happens from there. But hope everybody has a great week. Hit me up if you have any questions, and hope this was helpful.